Alrighty, everybody, we're going to get started here. SPDas is patiently waiting, and as are you. So here we go. SPDas, thank you for your patience. The trading floor is yours.
All right, sir. Thank you very much. No worries at all. And let's get started. Welcome, everyone. Good morning to you, those who are logging in or us from the west, the western side of the world, and good evening from those who are joining us from the eastern side of the world. And straight away, I think for a change, let's start with gold. The price action has been corrective decline until now, and this was structure in gold is a potential ABC. There you go. Potential ABC expanded flat in the making, and there you go. And we are right around the B wave or the termination of B wave. It remains to be seen if B wave is complete or it is wanting to print one more high. So the overall 4-hour wave counts are suggesting, let me just bring up the C wave as well. All right, here it is. Should be dropping somewhere close to 2500. Um, the prototype on the left and the actual price action is on the right now. There is a distance called there is a distance or ratio for how long the wave B can or wave B could actually push higher above the beginning of wave A, and that is around 38.2% distance of wave A, and which is 87, and the extension of ABC, which we have done, is around 89. So we will be closely watching. We've booked partial profits, but we are still open for one more small high, pushing towards the 88, 89 zone. Remember, our stop loss is around 95. Or recommended stop loss or when we entered the limit yesterday. So 90, 80, 85, 88 is something that we are still open to if prices want to extend a bit. One of the reason is also the RSI it's dropping lower. It should be holding around the 40 mark. Yes, it is. So it's around 42 on the hourly chart, which gives us a little bit of more confidence that, let me zoom in a bit, that this guy, the drop is definitely looking corrective. I mean, there's no doubt about it. So this is A, B, and C. And now, if it is wanting to do an impulse, then it would go like one, two, possible three, four, and five. So if it is going to carve an impulse, then it's going to be like this. I think that should match up towards 88 price. You can go on a 15 minutes time frame and also watch out if there is a lower degree wave 1 and 2 in place. If we count it as lower degree wave 1, wave 2, and 3, 4, and 5 on the northern side. I think this should be not not minute, but it should be sub-minute, I suppose. Remember, we are pushing within minute wave 5 of yeah, we are pushing within sub-minute waves of the minute waves of the uh, minor wave. So there are 3 or 4 degrees which we are working. Our goal is working right now. Let's try and find out if we can find out a figure here where we can enter so that it can give you a limit order in place, or we can place a limit order. It is coming around 97 and 2905. So that could be, if we bring it down to wave 3, then, sorry, I pulled the wrong button. I am not asking to buy, please. We don't want to buy right now. We only want to sell higher. And that too if price action reaches. Otherwise, we are happy to hold on to the short positions here itself. Now this is one thing which can happen. So let's be prepared for that, okay? On the other alternate count, which gold might have just done, is as follows. I'm not very clear about whether it is possible or not, but or whether we should go with this or not. That's why we've kept it as an alternate count. It has taken a while to produce this phi wave. It's not an impulse, but it's a leading. It could be leading line. We've got wave 1, 2, 3, 4, and 5. If it is a leading diagonal, that could be wave 2 of the diagonal, which is 3 waves up. And it has tested the 61.8% as well. And that's the reason why I am not really interested in buying. If it is wave 1, if it is leading diagonal wave 1 and wave 2 are complete, then we are not going to see any high above 70, number 1. And the downside for the short positions that we are holding is going to be yield profits, or start to yield profits very quickly towards 20, 28, 30 and 2800. So we'll have to watch out. A break below 49 will confirm that we might have gotten a lower high in place. All right, so we are inclined lower for gold with a stop above 95, but just in case if it goes to 90, then we would be more happy to sell or add positions. I hope the trading strategy is absolutely clear now. Now, one thing which we would like to observe on a 4-hour chart is that we've got no diverging scenario, and that's what keeps me a bit inclined of a potential high possible. Now that wave, that was a peak actually. It was not a divergence at all. This was a peak, all right. And okay, the next high there was a divergence, so it could be done actually. But right now, a price higher and a diverging on the other side would be an excellent place or very confident place to go and sell. All right, that's why I'm keeping myself, or we are keeping ourselves floating for a potential possibility of a new high, just around the 2900 or lower. All right, that's the scenario, and the daily chart goal is actually it's showing quite bullish, but you know what? The expanded flat structures are like that. When B wave actually goes and prints a new high, and suddenly bulls are all back in control, and traders are on the long side, and suddenly you see that reversal. I can show you an example of that, a classic example of that. And it has just happened. We caught that curve. Okay, gold is done. We're on the short side. Okay. Now, if we look at the Euro USD daily chart, and one of the classic examples that I was telling about, expanded flats, is right up on your screens here. That was wave A, wave B, and wave C. Now, this is not an expanded flat, this is a standard flat. But if you look at the price action, if you look at the top of wave B, most traders, when euro was trading at 1.01, they were almost convinced that we are going to go above that high. They were almost convinced. But the diverging scenario on the RSI was nowhere near the peak. You look at that divergence here. That's a peak and that's another peak, and look at the divergence. So September 2024, I mean, we were absolutely against going on any long side, and see what happens after that. Okay, and one more classic example. I'm quite eager to show this because we dealt with it around the September 24 practically. Now, closely have a look at this price, not this trend line, sorry. Now, let me remove this wave as well. That is a amazingly classic and powerful example of what an expanded flat can do. This is GBP USD. We didn't trade this chart, but we were we were actually focused on the euro and dollar index. But look at that wave. See, almost inclined. Actually, it should have gone below that A mark for the pattern to theoretically complete. But in this case, it's a running flat because that low was not below the previous low. That's just a matter of a few points actually. So, and if you measure the distance, it's not necessary, but I don't know. I didn't measure that time. Let's do it now. It should have actually, it would have potentially gone towards the 38.2% mark, which was a couple hundred, maybe less than a couple hundred points from where prices reversed. And gold is actually doing exactly the same right now. Momentum is amazingly on the bullish side, which is again psychologically very good contrarian signal for us to go and sell. All right, so back to Euro USD. We are going to go and find the trade here. Sorry, I took some time to explain what it looks like for an expanded flat to come live. So let's see how the price action shapes up in the gold for the next, I mean, in the next few hours. Back to our Euro USD trade setup. This has been for quite a while now, and I'm not plotting. I'm just doing the waves here quickly. So we've got the first impulse and then the corrective wave. That's a zigzag, one of the corrective waves, and now we have uh, wave one and two, and potential three, four, and the fifth wave is just about to be print actually. And one of the best places to enter was we have discussed last time was back testing the counter trend, and it's now bouncing over the counter trend line, which was supposedly providing support there, correct? So I hope we would have gotten those who are getting in on the first time, they would have bought. Those who had booked profits earlier partially would have added more. If you are still joining and if you have still not taken trades, it's still not too far, man, just 20, 25 pips above what we were recommending. So you can still go and buy it around 1.060367, stop loss at 1.0200, and the target is 1.0750. Okay, let's not do the Elliott, let's do the simple click, and there goes 1.0750. Okay, all right. If we go back to the dollar index now, the daily chart is quite clear. Five waves lower, the larger degree count is down, the larger degree movement is down, and we now have also completed an ABC corrective rally, touching the 61.8% right up there. And what we are seeing on the right hand side is just, let's go to the miniature view. It is right on your screens right now. So we were expecting wave 4 to turn somewhere around 38.2%. Remember, if, sorry, we were we were recommending shorts around 790 or something. The price action is still there around the 790. If you would like to initiate shorts here, it's okay. You can go ahead and still do that. And if it is being identified correctly, then we are next moving. So let's keep this structure as it is. Ideally, we should be next moving like this. Let's push it. Let's push the path a bit higher sideways on the right hand side. If this is correctly done, then we're going to see five wave lower towards 1.106.4041. All right, and the bigger picture, the targets on the large degree. And go back on the 4 hour time frame. And there you are. That is 104.87 and much lower actually, 101. 101, I'm not convinced that it's going to stop there. It has to stop. Should ideally go below that mark, 100, below 100. And that's still not the end. If you want to see the bigger picture, I don't know if this chart would show us. Let me check. It's a counter trend of a huge trend up there. So if we go back to 2021, then there was a five-wave rally upside. So the larger degree trend, the, the wave was up. And now what it is doing is, see the wave structure simply doesn't change by changing the time frame. That's what we need to, if we understand this logic, we are good to deal any time frame, any chart. So that's five wave up, and now five wave up, and then three wave down. It's going to settle somewhere around just around the 90 mark. Remember, five up followed by three down. The prototype. That's what we have. Five up followed by three down. That is A, B, and C. Remember, this is what we are plotting on the daily chart, right? A, B, and C. Or we are just saying 1, 2, 3, 4, 5, A, B, C, and again 1, 2, 3, 4, 5. Ultimately, it's going to be what? A, B, C of one larger degree. All right. So after that decline back towards 98, so this is what it happens. I mean, it's not the technical analysis is for the short term or intraday or just about for the short term. It can predict a multi-year, actually decades of what could be the possibilities. All right, sir. So that is dollar index. So we've touched base with the euro, gold, dollar index. I think we also traded pound. Let's have a look if it's providing yet another opportunity to buy. I think it is. Yes, sir. So isn't it a beautiful time to just have a look at the chart and then uh, just figure out that okay, it's one of three. So this guy, please don't miss it right now. If you're just watching the chart right now with me, then you know what? This guy is seriously in business. We've got wave one, two, three, four, and five in place. And previously it has got wave one and two of larger degree in place. And now it's got wave one and two of one lower degree in place. And believe it or not, that is an extended third wave into action. And if you have not seen what an extended wave would look like, then you should be watching this price action move. It's going to move like a rocket. If this is a third of third wave extension, and we've got that backside test as well, the prices are in the buy zone of the counter trend, backside test. Almost everything is matching, and I'm not. I don't have a doubt. It's a Fibonacci 61.8% bounce. There you go, bang on target. So I think we've got an excellent case right in front of our screens right now. GBP USD flashing 1 hour chart. So here's what we are going to recommend. Go and buy right now, whichever price you see, whatever price is there, 23.98 it is. Don't worry about the price figure. Would recommend it's a confident stock below that. You don't want to take unwanted risk because if that's wave two in place, then prices are not going below that. And that's the objectivity which Elliott wave will bring on the desk. Let's take benefit of that. And the extended wave, I'm not doing an Elliott wave, but I'm simply giving a double click. So 2400 buy, okay. The stop is what? 20, 22, 20 to 50, 150 points of risk, and there you go. It's pointing towards 1.3, sir. First is 28, and second is 1.3. So it's actually the third of third wave extension, and they are the most super powerful waves, believe it or not. If we've done this correct, then we are in for a beautiful third of third wave going forward. It would be a sight to watch, behold for in the next several weeks to come. GBP USD. Mark today's date if you're not watching, if you're not going to trade. It's 6th of February 2025, New York session, and we are long GBP USD 1.24, stop 1.22250, targeting around 1.3. Right. Okay, so I think we've got Bitcoin to see at least one. We're not recommending any trade in the coins for now, but at least we've got Bitcoin. Just in case, we've got to be a bit careful uh, for that fifth wave lower. I'm not saying it's guaranteed going to come, but we've got to be just a bit watchful. If it does come, then it's going to set up uh, this entire structure is going to be like the first wave of the beginning of the larger degree correction. I'm not saying it's going to break the skies right now. I mean, it's going to go below 89 and it's going to continue going lower. It's not going to happen like that. But if 89 breaks from here, then I think we are we should be we should be poised to sell higher after that and not inclined to buy thereafter. All right. And the invalid point or invalid is above 106. If prices break above 106, this count is absolutely invalid and Bitcoin would go towards 115 and even higher. So if you're inclined to be long or if you already bought Bitcoin and if you want to stay in that, the stop loss recommendation is 91,000, sir. Please have your stops over there. Protection is always better. And we've got to wait some more time for the Dow Jones and SPX 500 to start showing something and tell us a story that okay, fine, I'm topping out and it's time for you to turn or me to turn. It's just it could be the beginning, but I'm not confirming. It's not confirming right now. We would still want to see a break at least below that support 44,000, that that sideways support, that so the structure on the daily chart for Dow Jones. We are waiting to sell. We have actually sold, but we want to sell more. We want to really sell more. We sold around 44,000. That's okay. 45,600 is the stop. So the trade is there. I'm not moving the trade right now, but we want to be very sure and sell more or add more on the south side. A huge opportunity is seen on the downside here. SPX 500. Again, is it going to make a, or is it going to carve a leading diagonal over here? That remains to be seen. And now, if it is going to carve a leading diagonal, then prices have to stay below that high, which we discussed last time, and prices should drop lower uh, below that low, 50 or 5936. Even if it does so, a leading diagonal is in place. But I'm more inclined towards the third wave extension, brothers, until prices stay below 6150 or 6143 to be precise. More inclined towards a third of third wave beginning to cut loose on the south side. So it's going to be very interesting when we are seeing risk assets like the equity markets tanking and other risk assets like euro and pound rallying. It means the dollar is also going to tank. So I keep saying this is not very usually thing that doesn't have to happen usually, but economically dollar is setting up to weaken and dollar outflows will weaken dollar and the economic factors would weaken the like GDP or so. I'm not a fundamentalist, but those are indicating that the equity markets are also going to tank. So it would be interesting to see what is on cards. VIX, it's taking its own time. Let it take. We are good until prices remain above 14.99. We're absolutely having no problem, sir. But ideally, if the bottom is formed, bottom is in place, then we are looking for a new high above that 22 mark. All right. So that's it for this session. And thank you again for tuning in. Let's bring it a pause here. We'll be back again tomorrow. Tomorrow, my time, actually. Tokyo Sydney overlap and evening your time from the western side. Tokyo Sydney Open around 7 p.m. Eastern. And I'll be back to you, Igor. Thank you so much.
Thank you very much, SPDas. Always a pleasure.
Thanks.
Forex Lens gives you the edge. Forex Lens understands the global economy and financial markets. With machine learning, we give you real-time global analysis and investment strategies. Forex Lens lets you invest and earn with institutional traders, even if you're new to trading. Trading and investing made simple with Forex Lens. Check out our performance at forexlens.com. Get the edge on trades. Your eye into the markets. forexlens.com. Forex Lens.